Hey, good morning. Well, good afternoon to everyone. It's welcome to Epic Lunch and Learn. I am Dante Royster, mortgage broker, author, and your guide through the mortgage maze. How's everybody doing? Today is episode 30. Super excited. Episode 30. This is the show where real estate meets real talk and your lunch break into a master class. I'm going to be joined shortly. It looks like. Give me a second. Sarah, is that you? I think Sarah. So we'll just, once they get that all situated. So I'll be joined shortly. It looks like I'll have someone with me today. But yeah, today is Tuesday and this is episode 30. Episode 30. So this is pretty cool just to make it this far. Episode 30. They always say 50 is that magic number. 50 is that magic number. And voila, there he is, the man, the myth, the legend.
Hey,
How are you, sir?
Hey, good. How are you?
I'm doing good, doing good. So we're live right now on Facebook, LinkedIn, and YouTube.
Awesome.
Yeah, so we always ask, the guests, well, welcome to you, but people that are listening, definitely if you have questions, we're going to go into a little bit of the background story. These are going to be for the people that didn't see our actual podcast. For all the people that did not see our podcast, definitely it's worth a check out. I had the pleasure of having Matthew Sutika on Epic Spotlight, the podcast that airs on Thursdays. But for those that didn't see that, this will be a nice little refresher, get to know who you are. But before we dive in, I always have a little story that I like to share with everybody. And it's today I had this kind of thing on my mind. I said, what is that number? That's the amount of families I've had the honor of helping achieve their dreams over the last 5 years, which is, over the last 5 years, I've helped over 1,300 people. And can you imagine that? That's not just a statistic. It's a living, breathing community. It's a tapestry of lives woven together by hopes for security, growth, and new beginnings. Each family isn't just a file in a cabinet. They're their own painting on the canvas of life. And that's what makes these Epic Lunch and Learns conversations so powerful. You're not here for textbook theories or cookie cutter advice. You're here for the real, the messy, beautiful stories of people who've turned struggles into success, because this isn't just about real estate or mortgages. This is about creating legacies. As Ernest J. Gaines once said, we all have much more in common than we have differences. That truth echoes in everything we do here. Whether you're in Chicago, Miami, or somewhere in between, we all share a common desire of financial freedom. For some, it looks like paying off debt, and for others, it's building wealth that lasts generations. And speaking of legacies, today we're diving into the topic that every entrepreneur, investor, and business owner needs to take seriously and is often overlooked, which is insurance. Not the dry, dusty kind of insurance that makes your eyes glaze over. No, we're talking about modern, strategic, built for you insurance that protects the very wealth you're working so hard to create. And that's why I'm thrilled to have you today, Matthew Sutika.
Thanks for having me.
All right, let's get into it. So we're going to talk a little bit. Let's start with the backstory of Nimble Insurance, how you got into the business, why you chose the path you did as far as commercial versus residential.
Yeah, no, it's a great story. I actually started on the personal side, and it flipped me into the commercial side. Realistically, my journey started with the fact of just kind of seeing where the world was going, right? And the personal side, there was a lot of technology coming into play. On the insurance side, there's the Flo and the Geico, I call it, the Flo lady and the Geico who were, spending billions of dollars to basically say, y'all don't need a broker, make a quick 15-minute call and you'll save 10%, or, the Geico is saying going online. And so as a home and auto guy years ago, I came from it. My dad owned the State Farm for 40 plus years. I just didn't see that was going to be where I could be helpful in the future. I felt like most of the home and auto and the personal line space was going to go to the the technology side, right? And it has for the most part, and even for myself for the most part, I find myself going. So I was thankful to move from a State Farm over to help build an insurance company for a big real estate firm called Century 21 that does personal homes, and on that side, they owned also a commercial real estate brokerage and lending institution. And so while I thought I was doing homeowners insurance, they started having me quote out and help them with all the apartments and multifamily dwellings that they started to acquire. And just through that, it was as simple as that I was seeing that I liked. Sorry.
Technical difficulty right now.
Oh, can you hear me?
Don't worry. And let's see if we can get him back on.
Is it not me?
I'm good now. You're not frozen now. Yeah, I think you were frozen. Fine or no?
Yeah, you were frozen on my end, so I didn't know if it was me or you on it. Oh, Sarah's messaging me saying that she thinks it's you freezing because I'm active on her side.
Yeah. This is what happens with streaming. How about now?
I can hear you, but you still show frozen to me.
How about now? All right, I'm good now.
Yep, there you go.
You're moving.
Yep. All set?
Can you hear me?
Yeah, we can hear you.
Yeah, so you were talking about, there was a 40-year plus agent with State Farm, and obviously bring the son along and hey, do what I do and
yeah, I can jump in and keep going, but yeah, so just getting on the commercial side.
I just got to click on. All right, how about now?
I think your picture's still frozen.
There
you go.
Am I frozen?
Yeah, Sarah's saying that it's your freezing. Like I messaged her, she's in here. She said that I asked her if it was me or you.
Can you hear me?
Yeah, we can hear you. It's just going in and out, and then your picture keeps freezing.
It's a little bit of a. It's a little bit of pickleball here. We're going back and forth, pinging each other. Yeah, we're getting closer. How about now?
Yeah, I think that's better.
Okay. I thought it might be your new office with those thick walls.
No, I think we're good. I don't think we're losing on our end here. Sarah, are you on to be able to speak or no?
No, I got her backstage. You
Oh,
want me to put her on?
no, I just wanted her to, it looks like, yeah, we're good now. You're clear and going. And so I think we can hop back into it.
Yeah. Sorry about that. Yeah. So, I mean, obviously, dad wanted you to kind of follow in his footsteps, and that, that kind of wasn't really what you wanted to do.
Yeah, no, it really just wasn't what the market was, I think, going to allow me to do, really, right? Is that just, the personal lines, he grew up going to people's kitchen tables, people coming into the office and, spending hours getting your home and auto put together. And that just wasn't how the world works. No different than a lot of our industries, right? That you just no longer, a lot of that person-to-person communication, a lot of it was going online, right? People want things real fast. So I just started to realize when I started getting into the apartment space, or the multifamily space, that, the client was different, right? They did need advice. They did need help. It was more complex. So I was like, hey, if I'm going to do something, because I was a young guy when I started my State Farm, I was like 21 or 22 years old. If I'm going to do something for the next 40, 50 years, I want there to be value in that. And so just slowly over a couple year period, I really just started getting heavily into the multifamily and the apartment space. It's something that I felt like we could really build out a niche in a large space, large opportunity beyond, and I could do it for the next 30, 40, 50 years because the, people I didn't feel were ever going to not need to rent or be in an apartment. And I felt like the insurance was going to be very hard to digitalize or really replace the broker with how complex situations are with lenders and property managers and asset managers and all the different requirements that, you have to be, have the ability to do. It wasn't 3 clicks, like a homeowner policy, right? So that's really what drove me there. And then ultimately what really flipped the switch for me is I started investing myself. I started, doing some LP deals, putting money in, learning about depreciation, how that could help me on the taxes. And really then it became just this like, back and forth, like full circle process where the more I invested and the more I actually, was on the GPLP side and understanding what was going on in the real estate space, the better I was on the insurance side, right? Because I realized being on all those GP calls and like that I couldn't speak in like a nerdy insurance guy to them. I needed to speak, real estate. And I kind of built this almost like Rosetta Stone for translating between here's the nerdy insurance stuff I have to get answers to. Here's how a real estate person talks. They talk per door and cutting proceeds and, this. I can't go to them talking set rates and, risk modules, stuff like that. I had to be able to, mix those. And, I realized a lot of things that us insurance brokers do wrong or, just, not really from a bad standpoint, but we were explaining things incorrectly, right? I'll give you a prime example. A lot of people on the real estate stuff always want to talk per door, right? Sure. But what they realize on the insurance side is most rates are set rates based off of square foot. Well, that's why, a lot of times you hear a client or an owner come to you and say, why is my 100 unit right across the street from this other 100 unit apartment $200 a door more expensive with the same carrier? It's because in insurance, you use a cent rate based off of a square foot. So you could have a 100 unit apartment complex that's got a lot of big 2 and 3 bedrooms, apartments that got a bigger square foot, right? For those 100 units compared to the one across the street, it's all studios and has a lower. So therefore your insurance premiums, even though it's the same rate, is going to be higher for the 2-3 bedroom one than the studios. If you divide it in both by 100, that's why you have a difference in your per door. And so if you're not able to really articulate and explain that to a client, all they're going to see is like, why the heck, Matt, are you 600 a door on this one and 800 a door on this one? They're both 100 units, both across the street from each other. Like, what's going on? And so those are kind of an example of just one of the small things that you learn when you really understand both sides of the ball game.
Yeah, I think you're making a point here. I mean, because obviously I'm a broker, you're a broker, but you're talking about life experience, your experience of being an investor, knowing what to look for, allows you to be more effective to your clients. You're more of an asset because I want to get your insight on, hey, do you think this is a good deal or not?
Yep.
You know,
Absolutely.
and then because we probably from the first time you and I met, I was basically 100% residential. Right after you, I started, I got my hands and dibble and dabbling into the commercial lending space. So we're doing more office condos, office space, commercial storage, warehouses and types of things. Obviously, apartment buildings would be more of right in my wheelhouse, but there is some small commercial that I can do now, and it's just broadened my knowledge of just what's a capable and able.
Yeah,
You know,
absolutely.
you know. Now with technology and being nimble, because obviously I remember in the podcast you explained how nimble came about. So if you want to know that, audience, make sure you go to Epic Spotlight podcast, look up Matthew Sutika. We went into how did Nimble come about, but I'm curious. The big topics always in every industry is about AI. So how do you see AI and automation reshaping like commercial insurance? Like how is that going to impact you positively or negatively?
Yeah, for me, what my hope is with it and what we're trying to use it right now is for data. Um, we've tried to build a brokerage around, you'll hear me use the phrase, I hate when people do this like they're in the 1950s. And that's my way of saying like things are outdated, right? The processes. And historically, how insurance is done is very old school, very 1950s feel. And so we've prided ourselves to, if we hear from clients like where they come to us like, so annoyed, this broker, I wanted to just get insurance and they sent me 15 forms to fill out. They made me provide all this. So we always took a lot of that to heart. So we've historically tried to pull as much data as we can on our side and limit the amount of questions that we have to go to a client and ask for. If we can, put ourselves, it's like the Einstein phrase that I'll, totally butcher here, but it's like, you don't need to memorize anything that you can look up in a book or, some version of that. And
Right.
so we tried to have that for our clients. And so what I'm hoping and what we're trying to use AI is just as a simple fruit here, or low-hanging fruit, is can we pull this data in a simple way on these apartment complexes or other commercial spaces that it can go out and pull it from 𝐂𝐻𝐍 and any Google link and different like that. So we can get this data. So when a client comes to us and says, "Hey, I'm looking at purchasing this apartment," right?
Right.
We can pull all that data for them, right? We can pull, maybe even a lot of the loss history data, we can pull news articles. So that's the low-hanging fruit, is just having one source kind of pull data on our location. The next part of AI would be, I think, really, adapting into how we do it from a quoting process, right? Because if you can pull data and you can connect that with rate tables, then you can do a lot more automated from providing, estimates and, different things like that for the client. So that's really where we're at today, which is a very simple form, but you have to remember where insurance, like I said, insurance really still is just coming out of the 1950s. So, that's a good first step. For me, AI, I'm also very interested in what crypto and blockchain can do as well within the space as it relates to loss runs and, other things like that. But right now, that's what we're concentrating on. It's the most near and dear, is really using AI to do things like data pull, loss runs, things like that just make the overall process of getting business done for our clients more efficient. I can jump into some of these questions. I don't know if it got paused again on your side, but I will just start to you jump back on, Dante. I can do a couple of these questions here. So I think Christina asked the number one mistake entrepreneurs make with insurance. It's not having a good team. Just like anything else, you want to have good property manager, good insurance person, good tax person, good lawyer. That's the number one thing. And what it relates to insurance is that, you don't have to.
Oh, yeah, we can go with this one right here.
Okay. Yeah, I was just answering that one there is, so, the biggest mistake is just not having your dedicated individual that you go to for insurance, right? The reason I state that is no one goes to the doctor and, goes in there with their own diagnosis of themselves, or they probably shouldn't, right? They go in, they let the doctor be the professional. They have the doctor that they trust. And for the most part, they come out with that advice and then they take action. You want to do the same thing with insurance. Have a broker that you trust, that is going to get things done for you. Is going to provide the right advice, the right quotes, the right policies for you, and make them part of your team. And in the long run, they'll be able to do a lot of things for you beyond just the items that are near front as far as get me a quote and close a policy. They'll be able to really help and guide you and get you out of tricky positions when maybe you underwrote a deal that turned on its head after you went under contract a little bit. Maybe they can help you with the rates getting down or doing some different things like that. So, just have a trusted professional that just like you would a doctor.
Awesome. We got another one here from Jim.
So it says, how do you choose the right policy for new business? That's a good question. So every single, I'll say for the simplest, you normally always need property and general liability for most risks, right? So how we choose the right policy is, we do a full diagnosis. That sounds like I'm gonna, check your car engine here or whatever, right? But we're looking. Every variable, right, is like the giant guess who game, right, that y'all played growing up, where it's the same for insurance. So if we're gonna have this guess who board, and as you tell us, it's 100 units, and it's in this state, and it's the age built, and it's got this loss history or whatever. All of that's going to help us put down different flaps and be left with the 1, 3, 10 different options that are going to make sense for your property. And then from there, if all coverage is equal and opportunity is equal, then, of course, pricing will kick in after that. But that's really how it's all done on our end, is that you have quite a few variables on every property that are going to dictate what carrier is and therefore right policy for coverage.
We got another one from John. Is umbrella insurance worth it for investors?
Yeah, absolutely. So what I'll ask and I'll answer both, just because umbrella can sometimes be used two ways. It's the tricky thing about insurance is there's words in our space that, I'll have different investors using different terms. So umbrella always for me is what's considered excess liability insurance, right? Above your general liability, right? So you might have a 1 million, 2 million general liability policy that you have, and then you want to get maybe another million or 5 million excess or umbrella on top of that. So in that case, yes, my answer is, absolutely. I think that is a great idea. Most of the time it's lender driven and going to be required, or they're going to have some amount that's required. If your umbrella question relates to what I call like a master policy, right, or a schedule of properties, and some people will call that an umbrella, meaning that, should I have a policy that covers multiple properties? I'm not sure which John would go. That I would say is it depends on your mix of properties. Sometimes it does make sense to put them all together. Sometimes if you have some that are in tier 1 and then some that are up in Ohio, maybe you don't want to do that, because maybe those ones up in Ohio could be with a standard market, and the ones that are tier 1 are going to have to go to a wholesale market. So maybe you do want to keep them separate. So wanted to kind of answer both depending on which way John was asking that question.
I appreciate that. Another one from Faz. Can insurance really protect against market downturns?
That's a good question. I don't believe that there's a peril for that, which is fancy for, cause of loss. But what I will say, and you'll hear me, if you talk to me on a regular basis, is that I always talk about using insurance as a tool and not a line item, right? And so, there's not something that the market turns, you could probably turn in a claim for that, right? Or at least, like what I would say is Lloyd's of London will write anything. So I will never say that there's not a policy that you can find, right? But in general, let's just say your property, your GL, your umbrella policy that you will have on most, assets, right? Even personal assets, you're going to have property and liability coverage on those homes, right? Is you're not going to have a coverage to turn in. But when I talked about the very first question of having a good broker on your side is, it's all about that NOI, right? So, if the market downturns, right, you need to make sure that's actually when you need a better broker, right? You need someone that's going to be more aggressive, can really come up with options for you, because it's not just like it is on a homeowner side where it's like, hey, let me go shop 30 carriers and see if, like I said, Progressive and Geico can flip me a good rate here in 15 minutes. On the apartment side, there's a lot of bells and whistles that you could do. Maybe we talk about increasing deductibles. Maybe we talk about, adjustment in coverages. And what we can do is really use insurance in these tough markets to offset the market downturn for your property, right? It can be used as a tool, right? Maybe there's, things that we can do to add revenue, right? So there's a thing called tenant legal liability that can be added into properties, right? That gives a form of liability coverage to all your tenants, right? But that you can also, there's you can charge a delta on that, right? It's let's say roughly $6 per unit per month that's getting charged for the insurance, but you can have $15, $20, $10 added into the rent because you're given a form of renter's insurance to all of your tenants, right? No different than when you add in basic sewer, water, trash, basic cable, it's that same concept. So maybe we talk about something like that to add some revenue to the property by using an insurance product to do that. So that is, realistically, a lot of ways that we can help in a market downturn that might not necessarily be filing a claim, if you will.
Got it. We got another one here. You're answering these questions so good, they're coming. David, is there insurance for business partnerships breaking up?
I believe there is. I am not one to ever jump in and tell you I'm an expert on something that I'm not. I am not someone who does insurance in this type of arena. I'm a HAP guy, multifamily guy, and I, have a background in some other stuff. There probably is, just, like there is for anything else. There's insurance for events in case it's canceled. You get the option when you sign up for an airplane now, you can, do insurance in case you want to cancel. I bet there absolutely is insurance that, can be put in by you and your partner and and pay for a policy. Like I said, Lloyd's of London will write anything that, jumps in if there's, something negative that happens with the partnership. But that would not be my expertise, so I don't want to, steer David wrong here, but I do believe that probably exists in some form. It might be something that be interesting to look at in general, right? Because it's no different than life insurance or disability or any of these other things. So key man insurance, right? Yeah. So I guarantee if you talk to the right person, there's probably a Matt Sutika out there that this is their wheelhouse. Just got to find that person. I would be going to the Googles or, calling a friend to see who does this in the space.
Nice. And then, and just before I go to the next question, as far as commercial insurance, what you do, I mean, you're insuring boats, you're insuring toys, right? You're insuring apartment buildings, multifamilies. I just want to kind of get a scope of what you're insuring on a day in, day out basis.
Yeah, for us, can we do boats? Can we do homes? We can. It's what most of our clients are coming to right now is, anything from a single family rental, on up, so we're mostly, I'd say 95% of the time, we're helping our clients with some form of property that's a rental, whether that's a single rental or 400 unit apartment complex in Georgia, so that's what's coming to us. My background is I've done all those items, and we've been trying to get more and more to just doing stuff on the rental space and really making that, what we do in the market. So a lot of times on those other items, though, we are a great resource. Like, I had one of our commercial lenders reach out to me the other day, who's getting a new home in Austin. and I actually connected him with a partner of mine that I felt was a better fit to take care of his home and auto needs. So even if I don't directly write it, we're a good resource for a referral and get you someone that will actually, take care of you too. So, don't hesitate to ask regardless.
Why don't we get your contact information right now, if you got a second?
Yeah, it is. So it's Matthew, MATTHEW, and then at Nimble, which is NIMBLEINS.com. And my phone number, 312-877-2692. And then if you see my name on the screen here, I believe this hasn't been corrected yet. I believe I'm the only Matthew Sutika walking the planet, or that's on social media. So Facebook, Twitter, I still call it Twitter, I'm old, I guess. X, right? LinkedIn. If you search Matthew Sutika, I'll be the only one that'll pop up. I'm like, I say this from my kids because I have little kids, but it's like, I'm like Tigger, right? I'm like the only one. So, for any older people who get that Winnie the Pooh reference, but yeah, you can search me there and, shoot me a direct message as well, whatever's the easiest way. And then my contact information's out there online, but I always tell people that's the easiest way to find me, since you won't find another one. you won't. So.
Yeah, I had some stats today that I was curious on, and I was looking at. So, I mean, as far as licensing goes, you're licensed in how many states?
We are licensed, I believe we're somewhere right around like 44, 45 of the 50 states. I think.
Got it.
Yeah, we might even be close to all of them, truthfully, but most of our clients are in, from like California over, Southeast, Midwest. We don't have as many clients in if we're missing any states, it'd be like the Northeast, like Maine, New Hampshire type states, and then maybe like Oregon, Washington. And then I don't believe we've helped any clients out in Hawaii. So those might be the 4 or 5 states that are, we don't have a license for.
I mean, I think the big topic that I was curious about was just in the South region, we've seen a spike in prices, right? Insurance prices have gone up, not only just on residential, but commercial as well. I mean, are there ways to kind of combat that, or is there things that are going to help maybe change that?
Yeah, so that's been that's been the trend, right? If you talk to a lot of people here recently, you might even hear that things are softening up, which I believe they have been. Mm-hmm. The biggest thing is, depending on what type of investor and what type of properties you have and your broker relationship, right now I would say, you really want to be working with someone who has access to multiple tools, right? So, and whether it's a bull market or a bear market, I call it, if your broker has the right tools, they can help you out. So one tool that we have is we have our own programs that we've literally built ourselves. If we were Costco, they would be our Kirkland brand, if that makes sense. Mm-hmm. And so we're able to adjust rate and coverages and different things like that internally, which makes us really have the ability to help people on a cost standpoint and a coverage standpoint, right? When markets are really good, we still have access to all the non-Kirkland brand carriers, to keep that Costco metaphor going. Because maybe just everything in the market's cheap right now. And so we would go out to those. And then when the market gets really tough, right, that's where our Kirkland brand and, our ability to have conversations and, and adjust coverages and talk about deductibles get in place. So I would never really be nervous about what or where the market is, just as long as you have someone that really is doing that, for a living for you on the insurance side, you'll historically stay in a better spot than you would trying to figure out the insurance market for yourself, find out if we're in a bull or bear market when it comes to insurance. Everyone you talk to, right, it's just like the weather or politics, right? You go talk to 3 other investors, 2's happy with their insurance guy, 2 people say it's the rates are softening, 2 people say they're getting killed on the rates. Like everybody's, unicorn is different. So that's really my advice always when we talk pricing or, how our rates are just, we're looking at that all day, every day as the experts. And if you're working with us, we're going to constantly make sure that you're in the best spot.
I mean, obviously, from a consumer level, if I put my consumer hat on, I don't know what I don't know, right? I don't know
Totally.
what to ask you per se, and that's why I am always an advocate for speaking to a professional that maybe you can lay out some of the different endorsements and things that you can get your hands on to, potentially cover you, because a lot of times just overall when I'm dealing with the investors or, first time home buyers or what have you, they just don't even know what's inside their policy currently.
Yeah, so it's a great point. So we have a phrase in our office that you'll hear a lot of our people, because I always tell them, I'm like, you got to tell them what they're not asking, what you don't know, right? So you'll hear a lot of times when I'm having a conversation and then it's bled to my team, right? They will start to, just like your kids, they pick up on the same mannerisms and, conversations is, the amount of times we get to an end of conversation and, the topical will go, so you didn't ask us these questions, but you should. And let me just answer them for you, right? So we do a lot of that where it's like, hey, you didn't ask us if you should have more coverage here, or you didn't ask us if, your deductible is right. Here's why it's right. Here's why we picked it for you. And do you understand it, right? So there is a lot of education, and, because I deal with people from their first time purchasing to someone who's got 10,000 units, right? And so we have to always tailor our conversations to who we're talking to. And so we can do what I call hand-holding conversations to, quick chats if you're an expert, right? And so that's really, again, the specialty that we have to have on our side is to be able to, know our investor. And then a lot of times, like I said, an investor who was a hold hand last year is an expert this year, right? But if we're doing our job, we're going to make sure you're covered just in general, even if we didn't bring it up. And I hope most brokers would do that, and they do that. But we do a lot of those conversations to just, kind of fact check, like, hey, you didn't even ask us these questions. Most people do, right? And we do it in a way that, people can feel comfortable, so they don't feel like, oh, I should have known this or whatever. It's just like a real thing of like, hey, you probably should know this. You probably had no clue to ask. Let's go through it real quick, to make sure. So that's definitely just part of it. Like I said, no different than any profession, any profession out there. Like I said, if you have a doctor, the way they explain a diagnosis to a kid, which is, equal to like a first time, let's call it investor, then the way they explain it to a 50-year-old adult who's been in the doctor every week for the last 3 years, they're going to tailor their bedside manner. And, as an insurance person, we're going to do the same.
Awesome. Here, we're going to take a pause real quick on some housekeeping notes. So let me take care of some housekeeping notes right now. That way you can catch your breath with all the questions they've been asking. But, once again, this episode is sponsored by Epic Mortgage. Whether you're buying, investing, or refinancing, call Epic today, 708-905-5300, 708-905-5300. The book is out. It's available right on Amazon. It's the Ultimate Mortgage Guide. It's your blueprint, a step-by-step playbook for turning your mortgage into a wealth-building machine. So just go to Amazon.com and get your copy today. And once this episode is over, we want you to go to YouTube, our channel, Epic Spotlight, and check out our latest interview. It was with Natalie Ramos. She's the Director of Individual Giving at Teach for America. She shares her 15 years of experience in nonprofit fundraising and philanthropy. Discover leadership lessons, networking strategies, personal branding tips, and actionable advice for breaking into the nonprofit sector. Whether you're a seasoned professional or just starting out, Natalie's insights on work-life balance, building donor relationships, and advancing your career will help you make a bigger impact. Don't miss her top tips for aspiring nonprofit leaders. Natalie Ramos, Epic Spotlight interview. We do have some preferred listings that are available. These are listings that are out there in the marketplace that we have a connection with the listing agent. We can help you get your offer accepted. We have 1413 East End, Chicago Heights. It's a commercial storage going for $165,000. Contact Amico Pope at 312-600-7673. We have a couple condos on the market, 6945 South Dorchester Avenue, Unit 2S, Chicago, Illinois. Contact Evelyn Woods at 773-718-9742. It's going for $149,000. We have a 2-bed, 1-bath condo, 2030 East 72nd Place, Unit 3D in Chicago, going for $109,000. Contact Evelyn Woods, once again, 773-718-9742. We have a 4-bed, 1-bath home at 1605 South 16th Avenue, Maywood, Illinois, going for $250,000. Contact Tamika Bishop, 630-479-6352. We have a 11339 Valerian Way, Roscoe, Illinois. It's a 3-bed, 2.5-bath. It's going for $265,000. Contact Brittany Schultz by at 815-914-0486. And we have a couple of Floridian properties, Matt. You might be interested in some investments, some new construction in Jacksonville, Florida. So we got 12673 Senbay Court in Jacksonville, going for $381,990. It's a 4-bed, 3-bath. Contact Charday Nix, 904-520-8041. Also right next to it, 12707 Senbay Court. It's a 4-bed, 3-bath, going for $387,990. We have 9753 Amber Village Road in Jacksonville, Florida, going for $277,990. It's a 3-bed, 2-bath. We have 10882 Lishwood Way in Jacksonville, going for $347,650. It's a 4-bedroom, 2-bath, new construction. And we have 3542 Bella Sarah Lane in Green Cove Springs, Florida, going for $329,990, 3-bed, 2-bath. All those properties are available on my website, www.danteroyster.com. If you want to take a look at them, some great pictures, and we'll help you get pre-approved on those. Let's go back to some of these questions here, and really appreciate everyone chiming in. If you have more questions, please just put it in the comments, and we can get them. No matter if you're on Facebook, if you're on LinkedIn or YouTube, go ahead and put them here, and we'll get these questions answered for you. Justina, is there a starter package you recommend for new investors?
So I saw that question and I was trying to, a starter package, if you're meaning like policy wise, like I said, if you're in the rental space, it's going to be kind of the same policy. It's going to be that property and the GL and potentially the umbrella or excess liability. Really, if the starter package to you was like, hey, I'm new and I just would like a starter information on like the 101 of these, then that's something I would reach out and jump on with one of our team members, and they can kind of take you through a 101, starter package on what insurance, covers for your properties, and what it'll do for you. Again, I did see the question on the starter package and wasn't really sure 100% the context. So I hope I gave you some nugget there. If not, shoot me a message and tell me how off I was, I guess, on that answer.
Yeah, I take it as a real estate investor. So if she's buying multiple units, is there a, just a basic package or starter package that she should always have as a real estate? I mean, that's what I'm assuming. But yeah, just, definitely reach out to Matt after this, and, he can get you a more specific answer. Ryan, how do you avoid being overinsured and wasting money? This is a great question, actually. I was going to ask you this.
That is a great question. So as much as it's will sound counterintuitive, I don't want you overinsured and I don't want you wasting your money either. So every scenario is different, right? So there's a couple factors at play. Every time we're going to look at something, we're going to run some type of replacement cost, right? You might hear the word RC. Right, is the term. Remember I talked about it earlier here about insurance. People should not be nerdy. So you might see an insurance nerd, if you will, throw out the term RC. And what they're talking about is replacement cost, meaning I have this structure, whether it's a house, multifamily, apartment, whatever it is, take a match to it, I burn it to the ground, it's done. And then I call, Mr. or Mrs. Contractor the next day and I say, hey, I that same whatever, I just want you to rebuild it for me. I got a blank check here. How much is it going to cost me? Right. So that's the magic number that we want to insure your location for, right? Whatever that location is. So there's tools out there. Sometimes we're using, the carrier has their own built-in tool within the quote that we're putting, age and square footage and some other factors in, and we're getting an estimated replacement cost. A lot of times the third-party reports will bring, and the lender will have and ran their own replacement costs, or where they believe the replacement should be, and they want you to be at or over that. So it was usually a form of combination of us internally running our replacement, and then maybe fact checking it or adjusting it to what potentially the lender might bring to the table to get you there. And then we try to, keep it at that amount. Now, sometimes could be wrong because, you're like, hey, I just built this. I know it's not 200,000 and it cost me 250. So, okay, then, you brought a third variable to the table that we didn't have with our replacement cost tool and our lender. You actually have last year's contractor bid that you just paid, right? And where a lot of people get confused, right, is in my same example, right? Let's just say you have that $200,000 house on a piece of land, right, in Florida. Well, if you went to go sell that $200,000 house on a piece of land in Florida, you might fetch $1 million for that, 500,000, right? Because the market and the location of that $200,000 structure dictates that the sale price is 500,000 or $1 million, right? Location, right? But in the insurance world, the land doesn't go anywhere. I can't burn the land realistically, right? If on that same example. So the replacement cost where a lot of people get confused is that they will confuse their loan amount or the purchase price or the market price with replacement costs. And it's completely different. Sometimes they can be close, but on the insurance side, all we care about is that example. If I lit a match to your place, it burnt down, we had to rebuild the whole thing tomorrow from a contractor. How much is that, right? The market could be higher or lower, right? Because maybe that $200,000 place is on a piece of land, and I won't even give a bad example, just an area that would make that $150,000 to the market, right? It's actually less than what you had into it. So that's kind of also something that you want to make sure you have knowledge of, or you will feel maybe that you're overinsured or underinsured because you're thinking about market or your loan, and those things are somewhat irrelevant to the rebuild cost.
Do you deal with condo associations and getting insurance for them?
We do.
Yeah. So one annoyance that I've run into several times, especially in the Chicagoland area, is this actual coverage, the actual cash or the cash.
Actual cash value. Yeah.
And that doesn't work for most lenders. I mean, that's not acceptable. And so I just take me through that process, right? You only know what you know. You're looking for cheap, right? The association, hey, we got these association dues. We want to keep our costs down. But I don't understand why the insurance agents would even offer that, knowing that there's complications from lending perspectives.
So let me put this under the umbrella that I don't like to have a bad word to say about anybody, right? But historically, no, someone shouldn't offer actual cash value and someone shouldn't accept actual cash value unless both parties 100% understand and agree to how that's going to work for them, right? So for the audience that may or may not be aware, I use the word just replacement cost and RC. This is its evil twin, ACV, or actual cash value, right? And so how insurance works, right, is that you can have actual cash value only, or you can have replacement costs. And I'll give you a claims example so you can understand how both work, right? You have a $100,000 building, right? And it's built in 1970, right? So it's older, right? It's pretty old, right? It hasn't even been updated. Thing burns to the ground, right? Or has a claim, right? How insurance works is they're going to come out first and they're going to say, that thing burnt to the ground. What was the actual value for that 1970, building, that's 70 years old, right? New it was worth 100,000, right? But we're going to depreciate it 80%. We think it's only worth 20,000 because it's old, right? So your very first check that they owe you, if you only had actual cash value, is 20,000 in that scenario, right?
Wow.
But it costs 100,000 to rebuild that, right?
Right.
But the actual cash value of that place might have been 5,000, right? Now, if you have replacement cost, it works like this. That's check one. Here's your actual cash value. We owe you this, right? Now, if you want to go out and actually replace, or I'll use the word rebuild this, and it costs you $100K, we will give you a second check for that additional $80,000 because you have replacement cost coverage to rebuild your spot. So that's where you can get in trouble having actual cash value, because it's the amount that everything is depreciated a lot of times is dictated by the claims adjuster or the carrier. I've seen all kinds of types of ways where they come up with, what that number is. And normally for our clients that have replacement costs, I'm not overly concerned as much what that first number is or how much they're going to depreciate. Bearing my client tells me they're not going to actually rebuild. They just want to take that first check and run, and sell the land, right, in that scenario. But that's where you can get in a lot of trouble. So now what sounded like the insurance going from $10,000 a year down to $5,000 a year and getting that big discount, right? Now on your $100,000 building, right? Now you only get a check for $20,000 if it burns to the ground, right? Compared to, 100. And again, everything is a business decision. Insurance is a tool, not a light item, right? Is my phrase. Where I'm okay with actual cash value is if you make the business decision that you're okay with that, right? Maybe you don't have a loan on it, right? And you say, hey, look, I want to pay $5,000 a year compared to 10 because this thing burns to the ground. I'm happily will just take my $20,000 check and move on. I'll sell the land, or I'll build something myself, or whatever. Okay. That might not be on the insurance side what I recommend or what I would see right, but that might be a business decision on your end that makes sense for you, right? I can't afford $10,000 a year cash flow, I don't have a loan on this, so I would just I'd take my $20K and walk away, right? Okay, right? The insurance hat me might not agree with you, but the business owner will say, hey, that's your business decision that you made. I just want to make sure you understand what you're getting into. The worst thing is when people, they take that discount, they get actual cash value, and they really get a claim, and then they're like, what do you mean I can't rebuild it for this first check? It's like, you don't have replacement costs. That's not the time to understand what you have, right? Then you're in a bad spot.
It's tough with associations because, depending on how big the buildings are, right? If they're 80 people, the voting perspective of just trying to get everyone. And to your point, you probably have several homeowners in the building that paid cash, especially as a condo, right? So they just, hey, it's $120,000, or, I just read off a 2-bed, 1-bath condo for 109. Someone is probably just going to pay cash for that. And so when they are voting for, hey, we're going to have to increase association dues on a monthly basis, and they say, no, I don't want that, find cheaper insurance. And then someone, is appointed to work with insurance agents and well, I need cheaper insurance or I'll go somewhere else. It's just to me, it's a lack of knowledge and understanding.
I would say, just to make your listeners here feel a little bit better, a lot of times it's very hard to actually get an ACV only policy, like a full on, right? So there's not too many times where that's going to be available, especially in a multi-unit condo association. So in general, that will help with that scenario where people are trying to get, cheaper insurance, on that piece.
Right.
Because a lot of times it's harder to get these policies. Like right now, it's, someone actually says, man, I actually have to have ACV, just that board I talked about earlier of the guess who board, It's going to limit just the amount of opportunities. It's not like every carrier, for the most part, I just have a switch that I can flip, to automatically have them just send me an ACV only. Some carriers, right, take the stance that they don't even want to offer just that. They only want to offer replacement because they're fearful of a lawsuit, right, that they might get because, even though you wanted that ACV policy, right, we all know what happens, in the court of law, right, when a client says, I didn't even know what that was. No, I didn't want that, right? And so a lot of times what you're seeing, which is probably smart, is these carriers not even wanting to offer that so that they don't ever get in that bind. Right. So they're not in that position to have to say, well, that's what you wanted. Right. It's like, let's just take that choice off the table so that you don't make potentially a bad decision for your HOA or, your complex.
Yeah. I don't think, and this is, and I'm going through it right now with a couple of different of these condo, master policies and stuff like that as we're unraveling them. And I don't think the consumer really knows the difference, to your point of ACV and RC. The tutorial you just gave right now, made it clearer to me to have a better understanding. But I think they're coming to an agent of some sort saying, hey, I'm looking for cheaper insurance. What do you got? And the creativity, comes from the insurance broker. But it is interesting to know. We got a couple questions. Oh, go ahead. You want to finish?
No, I was just going to say, do this before you go ACV. If you're listening to this, just call us first. There's probably 9 or 10 other ways that we can help you from a rate reduction before you have to go with an ACV policy. So if you're dead set on an ACV policy, let us fact check and see what we can do first. And that's not even like a sales pitch to y'all. That's just how much I hate ACV. Like I do it for free for you. Just don't end up with that unless there's a reason behind it.
Awesome. Looks like we got a couple, 2 questions, and then we'll get this wrapped up. Maria, what's the fastest way to get coverage in a hot market?
Sounds like an Uber Eats question, right? Maybe I'm just hungry today. I've been nonstop on meetings. I haven't eaten my lunch, just like sitting over here, just staring at me, right? The fastest way to get coverage in a hot market.
Just to call you, right?
Yeah, call us. I mean, that's like the softball answer. To give you more complex, is I think you want to go to a broker that does have good turnaround times. There is a lot of brokers out there, again, under my hat, I'm not saying anything bad, that don't believe in the Uber Eats quick method of getting back to you, responding back to you, or getting new things in a timely manner. So just work with a brokerage that values response time and getting back to you with rates. And depending on your size, if it's 1 unit or something like that, it might be an instant rate quote out there for you. If it's, depending on size of space, a lot of our apartment complexes or whatever, we can turn around a rate within 24 hours or even, sometimes same day, depending on the scenario. So just work with someone who has that same mentality if that's what you're looking for.
I was thinking you and I are probably similar in age when you're going to reference Winnie the Pooh. So with that being said, I do encourage the audience to, give a little more patience. I think with technology and with, some automated processes, there's an expectation that everything is like this. And sometimes when you're working with an individual, such as Matt or such as myself, we do need time to think. We do need time to process the information because we want to, to some degree, give you a nice presentation of like, hey, I looked at these things and I want to offer these opinions to you, stuff that I've analyzed, something I've, not just spit out off the computer and say, here you go. I want to kind of know what I'm speaking of. So, I have noticed a tick up of impatience. Like, well, man, what's taking so long? And it's like, hey, there's a little bit of an expertise that I may have, but I need to be able to, exercise that with a little bit more time. So, I do always caution people for that speed. Be careful. I need a little time. Let me wrap my head around it. I'll get it done. What do you think about that?
I totally agree.
Yeah. So
not saying they're going to take your sage advice, but so we'll give us time, but we'll also be as fast as you need us.
Yes.
I'll be politically, very politics for you. I'll give you both sides of the coin.
There you go. Last question that we have is, what should we look for when switching providers? That's a good one.
I think if you're talking about providers as in a different carrier, then
yeah.
I think
so I got State Farm. Let's say if I got State Farm and I'm thinking about going ahead.
I think most people, it's always price, right? Like that's not coming from me, but that's what most people are going to switch for. If they're going to say, hey, they never call me up and say, hey, Matt, I'm with State Farm and I just want to see if there's better coverage out there, right? The question is always like, can you give me a better price, right? So right. I think what you should be looking for with your switching is that you're not heavily downgrading yourself to make that switch, right? And save that money, right? So if you're going from this carrier to that carrier, does that change anything coverage-wise, or it's just a carrier change? Is that different carrier having an effect on you? Because ultimately, I don't mind if you go to, from one carrier to the next, that maybe one you think is an A carrier, one is a B carrier. And I don't care if you change your deductibles from one carrier to another. What I really care about is you understand the decision that you're making, right? So that's the key for me when you're switching, is that I say, hey, I'm going to move you from State Farm over to Nationwide. And I tell you, hey, State Farm handles claims in 24 hours. Nationwide sometimes takes 2 or 3 days. At State Farm, you have a $10K deductible. Over here, you have a $20K deductible. But you're gonna, with this move, you're gonna save $5,000. As long as you understand, okay, it's gonna take me a few more days to get my claim. I got double the deductible, and that business decision is worth the $5K savings for me. Then I'm happy as your broker, because you understand the business decision you made, right? Insurance is just a tool, right? The decision that everybody as an owner needs to make is how you want to use those tools, right? And, maybe that's an availability thing, but when there is multiple tools available, just like anything else, you got to pick which ones that you want to be cordless, which ones you want to plug into the wall, which ones take an hour to charge, which ones take 3 hours to charge. And, you're going to pay up or down for that. And there's going to be pros and cons. So normally most people don't get in a bad position if they truly understand the decision they're making when they move from one to another. If they just concentrate at the end of the day of, I was at 10,000 and now I'm at 5,000, that's where they can get in trouble. Maybe that's where they end up with an ACV policy.
There you go. No, that's awesome. You hit it on the head. I mean, obviously, you're a commercial insurance broker. I'm a mortgage broker. It's the same thing. I always want, I don't care at the end of the day what end provider we're going to use. It's still going to spit out green money. It's about the terms to get the deal done. So it's the hurdles that we have to go through. It's the underwriting. It's like, how can I structure the deal to make sure that your dreams, your goals get accomplished? So, no, it was good stuff today, and we banged through an hour, man. I really appreciate you. So, real quick, tell us about this new office. I didn't get to hear it earlier today.
So you can see a little bit from I'm like still unpacking. I actually should have moved that before this call, but I was rushing to it. So we just moved in Friday. If you can see this way, which you guys can't, it is Amazon boxes. Moving guys are right now moving a fridge. We are in the thick of just getting it all set up right now, but it's a real cool space. We're in Sarasota, Florida, in a really cool area called Lakewood Ranch. Right now it's like the second largest planned community in the country. So it's like this big planned community that we're in. We're in this like little downtown area, which is really neat. It's got restaurants and shops and haircut place, whatever. It's real community feel. And if you see me on social media or me in general, like I'm very family focused, and so as an entrepreneur who is somewhat of a workaholic, I got a 3-year-old and 1-year-old, and so the best way for me to kind of combine that, and a lot of my team has younger children, in the area and stuff like that, was to build an office space in a community in which our children could visit, or like there's a children's park right here, outside my window that my wife and the kids go to a lot. So, if they're over there and I got 30 minutes in between a podcast recording or a live event or whatever, I can walk over there, see the kids at the park, and then come back to work. And so really built that space around this community idea that I wanted a lot of my other, employees to have that same type of feel with their spouse and their children, where, they can kind of have that mix. Because for a lot of us, people working, we leave in the morning, maybe we don't even get to spend time with our kids, or it's like real quick and you're getting to school. And then, if your kids are younger, sometimes my kids go to bed like 6, 7 o'clock. It's crazy. Like they go to bed early. Right. And so even if I leave at 5:30, right, I'm not getting to see them. So it's a great way for me to, interact and be around my kids, and also, live up to all the expectations and responsibilities I have as an owner, and entrepreneur as well.
That's awesome, man. That's awesome.
Yeah.
So you bought the space?
We're don't shoot people. We're just renters. Just renting in the space. Sorry for all that. I know that's like we should own. And honestly, I looked in this area. Our area is not a lot of business in this area. So there wasn't just a lot of real opportunities to own a space.
Sure.
We're in a very residential community down here that. So there's not a lot of big like Fortune 500 companies in the area or things like that. So there's just really mostly all the building spaces are restaurants and shopping centers and things like that. It's like, this is like where you live. Most of our clients, we are all remote access to them, right?
Sure.
We don't have any clients that like come into the office, right? Because they're all over the country. So really our space for us is about comfort for my team, good work environment, and, in that community. So that's what we really concentrated on, where like back in the day when I owned my State Farm, we did have clients coming in, and where I centered it more for like the client experience. Now I've built the office more about my team and their feel, and, putting in almost like what Google does, right? Like we're not like a foosball table in here, and a good fridge and, TVs on the wall or whatever. Like I want my team to really enjoy the space, which will ultimately then bleed through to the clientele, right?
Yeah, no, that's awesome, man. And then what's next, man? You got the new space. Where are you up to next?
Next is fourth quarter is always a booming quarter, right? So we got that coming up because everyone wants to get that last deal and depreciation deal and tax deal in before the end of the year. So we'll have a real busy fourth quarter, I'm sure, with new business and renewals. Got a lot of travel in the books for myself personally and professionally. And really, we're just looking to grow. So we'll probably bring on a few more team members if we're, good to get connected with some individuals. We're been at this point 100% referral as far as, team come in. So we'll want to keep growing the team. And we just did an acquisition. So we now just opened another location in Houston. So that was exciting.
Nice.
Closed about 30 days ago. So we're looking to see if there's, more broker owners out there that are wanting to, be part of something bigger and kind of join in on our team here. So, that's the short answer, or maybe the long answer, depending on how you look at it, of kind of what's next for us.
Awesome, man. Well, hey, I appreciate you. I'd love to bring you back on. We're going to be, this is what we do. We stream, and we just talk and try to answer people's questions and take it from there.
Great. Yeah. Thanks for having me. Happy to be on anytime.
All right. You take care. Have an epic day.
Hey, you too. Bye.
Bye.